afternoon, everyone, and welcome to Stock Market Today. It's Allie, Coram, and Justin Nielsen here with a look at the action in today's session, Monday, August 28th, where we saw gains for the major indexes, but Justin, potential resistance, that is, still remains.
Yeah, it was a really strong start to the day, but that was kind of it. It quickly petered out and was really kind of back and forth for the rest of the day. So what we're really looking for is some power here to kind of prove to us that Thursday's reversal of last week can, be overcome. And
Right.
there's a lot of stocks that just aren't there yet, but I'm going to show a couple that are looking a little interesting. We're going to include Cactus, Hubbell, and Ollie's Bargain Outlet.
Yep, those are three good ones to check in on. We'll do that first. Let's take a look at the major indexes. The Nasdaq today up 0.8%, followed by the S&P 500 and the Dow up 0.6% each. Small caps also had a pretty nice day with the Russell 2000 up almost 0.9%. But like you mentioned, Justin, that reversal for the Nasdaq here, right at that 50-day line, poses some pretty solid resistance that we can connect back to June and July as well. So that seems like a key hurdle for this tech-heavy index to get back above if the bulls are going to take over control again.
Yeah, and I mean, look, I like that the fact that the index was able to kind of close in the upper part of its range, but we're still, you know, I mean, besides the fact that Friday we did undercut the low of Thursday a little bit, we're still mostly trading inside that big Thursday reversal, which was a big outside day compared to the previous 2 days. And if you go to the 30-minute chart, or yeah, the 30-minute chart is fine here. You can see how it was really, kind of powerful to start the day, a nice gap up, but it really was kind of a lot of back and forth action.
I'm
You
pointing
know,
to the wrong day.
yeah,
We're right
that's okay.
here.
Yeah.
Guess my mind was thinking more of like IBD Live and looking at the five. There
Uh,
must be only so many bars in a 5-minute chart. No, we're looking at a 30-minute. So
But you
this
could
is
look at a 5 minute. You could look at anything. It's going to show the same thing, that it was really kind of a strong start, but it quickly kind of lost ground. And then each time it seemed to, try and go back up to the highs, it kind of started faltering. So again, it's great that we closed kind of near those highs, but it's really hard to make any strong conviction buys early in the day when you see a lot of this back and forth action. And look, we saw some of that on Friday too, after the Jackson Hole comments, a little whipsaw action down, and then a move right back up. So I think there's still a little bit of work to be done here that we've just got to get through, and that means being patient. It's not one of those things where you always have to do something in the market. Sometimes sitting on your hands doing nothing and watching is the best course of action.
Let me ask you this, Justin. If we get rejected at the 50-day line again, how bad would that be? Or is it really at this point it's kind of in wait and see mode for undercutting the ultimate rally lows, or decisively and powerfully getting above the 50-day?
I mean, really, if it gets resistance at the 50-day moving average line, that's not going to bother me too much, because we could go sideways for a little while here, and that would actually be constructive. It would allow some of these stocks to kind of recover a little bit and heal from some of the damage that was done. Especially, there were some stocks that really, took it on the chin during this last earnings season. So, going sideways here is fine, but a lot of times when you go range bound for a while, then you build up an expectation of breaking out one way or the other, either to the upside, which would be right above that 50-day moving average line and would be a positive, or to the downside, in which case you start looking for, okay, what's my next area of support? Once we get below 13,000, for instance, then we're looking at possibly all the way down to the 200-day moving average line, and those highs that you're pointing out there in February and March, April, that would be kind of the next potential stop.
Mm-hmm. Thanks for that, Justin. Let's also take a look at the S&P 500 getting right up to its 21-day line, and it's about 0.5%, maybe a little bit more below its 50-day moving average.
Yeah, so you could easily see it, kind of break above that downtrend line, but again, I'm not gonna anticipate that happening. I'm gonna
Mhm.
wait for it to happen and then act accordingly. And we've really got to have the merchandise out there. Right now, it seems like the merchandise is really focused a lot on the oil and gas, the industrial, some of the electronic, areas. So that's where we're going to have to really kind of pay attention to see, hey, is this where the market continues to favor for a little while? Is this little sector rotation, or do we get back to growth? And
Right.
we tend to be growth investors. That's where we make the biggest amount of money, and it's really hard sometimes to have a market that's going against you, um, to try and make money in outside areas.
It is. And one more thing on the NASDAQ and the S&P 500 is we are still on the hunt for a follow through day.
Right.
This rally attempt remains as long as we stay above that low from 818. But if we go over to the Dow, that has a little bit more work to do in its rally attempt.
Right. So for the Dow, we're no longer in the follow through day hunt. We need a couple more days there because Friday is day one of a rally attempt there. So it kind of restarted because on Thursday we undercut the lows. So that's why we start the count over there. But you're right. For the Nasdaq and S&P 500, we could get a follow through day any day. But you'd also like to see it get back above that 50-day moving average line. I could easily see a day where if we pull back a little bit more and then have a powerful day and we're still below that 50-day line, it's going to be
Mm,
hard for me to have a lot of conviction
right.
until we really kind of punch through and break above the downtrend.
Hmm. Yeah, that makes a ton of sense. Okay, let's take a look at 0TNX. This is the 10-year yield. Not a whole lot of movement today, but if you look over the last couple of months, I mean, this trend is still very much up. There have been some pullbacks along the way. It looks like another one is underway, but the last couple of times it's found support at the 21-day line. So, what are you looking for in terms of the movements here, what we could see, and the impact on equities?
Right. Well, a lot of times, both the dollar going up and yields going up are things that negatively affect stocks. Sometimes that correlation won't hold up on a daily basis, but it does usually hold up over longer term. So the question here is: Are we hitting resistance at this old level, and potentially going to come down and off of it? That could be something that allows growth stocks, especially, to continue their moves up. But if we do go higher, that's something that could put some pressure on them and might mean, hey, we've got to kind of get some adjustments to these valuations because as you get the higher 10-year yields, that does kind of discount your future earnings. So adjustments get made in those valuation models. And same thing with the dollar getting stronger, especially for the multinationals. That's going to start, potentially, getting some tougher comparisons when they do those forex exchanges and stuff. So just things to keep in mind. Overall, there are times where you can have the yields and stocks going up together. Yield or the dollar and stocks going up together, but you just have to kind of be aware of those correlations and act accordingly.
Absolutely. Let's also take a quick look at gold. Your thoughts on what we're seeing with the shiny metal, Justin?
Well, this has been kind of in a basing pattern here, and it's still below the 50-day moving average line. But it would be interesting to kind of see if this does start coming up. There might be a trade here, so it's just something I'm being aware of. It did get support in kind of a level that you would expect it to. Right around that 175, 79 area back in June and July. So, yeah, just something to be aware of. Again, a lot of these variables, kind of, the price of the dollar and the yields and all of these things can affect commodities and oil and everything. So just kind of keeping it all together, sometimes you can kind of get some sense of what can move if the trend continues. So
Hmm.
right now there's a potential short-term trend here, but it has that more intermediate term downtrend that it's really got to break above in order to be actionable.
Hmm. Yes, I'm going to go ahead and set an alert there. Why not? And speaking of oil, let's take a look at XLE, Justin, up almost 0.7%. But it seems like underneath the surface on IBD Live, there were so many oil and gas stocks that were looking interesting.
Yeah, so remember XLE is dominated by ExxonMobil and Chevron. They make up together about 40% of the movement in this ETF. But you can kind of dig down a little bit deeper and kind of see other names. For example, if you go to OIH, you've got SLB and Halliburton that kind of are a little bit stronger here. This is the services area. You've got XOP, which is the U.S. explorers and producers. So that's another area that you can kind of take a look at. So there's a lot of different ways to slice and dice this. And you could look at the entire sector and just go with the highest relative strength names. But certainly one of the things we're seeing in the oil and gas space is a lot of them look like what correction? They're maybe pulling back a little bit, but they're not breaking down below their 50-day moving average lines. They're actually more
Mhm.
consolidating after some big uptrends and
Yeah, we've been
consolidating.
wanting them to pull back,
Right, exactly.
actually.
So
So we're getting what we want.
exactly. They did what we wanted, and so now it's a matter of kind of picking and choosing which ones are maybe the first ones to come out and which ones look the strongest.
Right. Thank you for drilling down into those different
I
ETFs for
see
us,
what you did
Justin.
there.
Yep. And you mentioned industrial stocks
Yeah,
up 0.8% today. So coming up on a key level, kind of breaking a downtrend. Didn't look too decisive though. So maybe just a little bit more umph than it would
right.
be.
Yeah, again, it looks like it kind of came right up to that line, that downtrend line that you just made, and it's right there at its 50-day moving average line. So again, I'd like to see a little bit more umph here in the industrials. But some of the individual names, I did notice that you mentioned, or you threw up Jabil for a second
Yeah.
there. There are the names out there that are looking, really interesting in that industrial space.
hmm Well, let's take a look at WHD. This is in the machinery and equipment area of oil and gas. A nice percentage move today and closing close, if not right at the highs of the day, up 2.7%. Volume was lighter than average, though it looked like it did pick up pace from the last couple of days where it had gotten pretty darn tight, Justin.
Yeah, that's what I really liked is that it just tightened up right there at the 21-day moving average line and kind of popped today. I know that Ken last week mentioned Baker Hughes, BKR, which is one of the rivals. So this is looking pretty good. Both of these, again, volume hasn't been spectacular there, but you
Yeah.
could see potential moves, bounces off of these areas, after staying tight for a while. And it also happens to be our stock of the day today. So I believe Kit Norton was the one writing on this one today. So he kind of gives a breakdown of what's happening with the rig counts, something that we're often looking at Baker Hughes rig counts as a kind of a measure of what's happening in the oil and gas space. But consider that this has had a 72% run from that bottom at 31, 36. So it had 10 out of 11 weeks up, and now it's just refusing to give up any of those gains. So
hmm
the fact that it held right there at 50, I kind of look at this as maybe a cup with handle, even though it's not being identified as such. Still, I like the fact that as deep as this consolidation was, right now it's holding those gains and it's staying tight, and that's a big thing.
hmm Nicely analyzed there, Justin. Let's go to HUBB. This is Hubbell in the electrical power equipment group, forming the right side of a base.
Yeah, so here, I mean, it looks like it's your run-of-the-mill base, but this is very tight. This is a higher price stock, and so it might surprise you to see that this is just a 12% depth. Now, it started with some pretty ugly action after that earnings report, but I like that it's kind of recovering. I don't think that there's any reason to kind of get into this early until it really kind of surpasses the battering that it took at those price levels. So I'm looking at 340.06 as a potential entry here. But I like the fact, again, if you look at the weekly here, this had a 30% move from its last breakout right there around 260. And it's just really, again, holding the gains, got support right there at 300, just kind of stopped going down. And if you go back to the daily, you can kind of see that as it had those 2 big days in terms of volume, maybe even a third, but that third day, even though it was above average, inside day, it's just almost like the selling stopped, and it did go down a little bit more, but it really was tightening up, and getting a support right there at 300, a nice round number. And now we're back above that 50-day moving average line. A nice day of volume on Friday to really kind
Mhm.
of punch it above that 50-day moving average line. So those are some of the things I'm looking at with this one, that I think look pretty good.
Right. And I mean, one could imagine that if it keeps it up as it continues to carve the right side of the base, that we could see that RS line at a new high as it stages a breakout. One could imagine that potentially happening because of the progress that the RS line has made over the last couple of days.
Absolutely.
And last but not least, let's go to OLLI. A really nice move here today for this stock, up almost 5%. It did have volume behind the move, getting back above the 21-day line and a trend line. But Justin, this one's reporting earnings in 3 days.
Yeah, so again, I was kind of like running a screen for pretty much the whole day, looking at what things were holding up best. Not reversing, because a lot of stocks reversed early on. Ollie's was the one that just kept on getting stronger throughout the day. Right back above that 21-day moving average line. Really didn't give up much, after having a nice move. And actually, if you look at the weekly chart, it
Mhm.
really had kind of this, almost 3 weeks tight action here, and it kind of tried to break out above that, but it really didn't come down that much. It really kind of held real nicely. So I think that this is, looking strong. But as you mentioned, the problem is Thursday, August 31st, before the market opens, Ollie's going to have earnings. So that's something that prevents me from necessarily taking a flyer right now. We could look at maybe an option trade or something like that, or just wait for those earnings. I should also mention that retail has been very fractured. You've got some great winners, and you've got some horrific losers out there. So
Yeah.
it's that's one of the
Especially with
other
their
reasons.
earnings reactions, right?
Yes, exactly. I mean, everyone's talking about the Dick's Sporting Goods, the shrinkage issue that they had. So, that's something that I think a lot of the retail companies are, looking at a little bit fearfully. So I really want to see that earnings report be behind Ollie's
Hmm.
before taking action there.
Right. Yeah, on. That was another one that got hit on earnings. What about the likes of like Abercrombie, A&F? Yeah, this is when you say fractured. I don't know. This one came to my mind as I
Exactly.
feel like they had a good report in it. And
Yeah,
yeah, they
exactly.
did.
And there were a few others. I mean, GES, that had a phenomenal move after its earnings. But you look at like Dollar General, which is also in the retail discount variety, like Ollie's, and its earnings the last time around was dismal. So it hasn't recovered since. So again, there's very different looks, depending on what space you're in.
Mm-hmm. Yes. Well said there, Justin. Thanks so much, everyone, for tuning in. That is it for today. And we will be back with more tomorrow morning on IBD Live. And we hope you join us, investors.com/IBD Live for all the details there. We'll see you then. And we'll also see you right back here tomorrow at the close.